Hey folks, David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis. Today's Wednesday, June 10, 2015, and we had the expected pop in the market, right? Yesterday we said we put in this doji candle, which is normally a bottoming signal. We hit some important supports. In fact, the more important support was here on the E-mini contract, right down here at 2070. Here's your doji candle here, and your huge up move today. The S&P was up 25 points. The Dow was up 236. The NASDAQ was up 62. The transports were up 56. It was just a solid up day around the board, or across the board. And that was somewhat expected because we knew we were looking for a low. We know that we're looking for one more rally in the market and into the summer months, and then we'll talk about what happens after that as we get into this rally. But what we have to see from here is we need to see a follow through, but it doesn't have to be a follow through tomorrow. Tomorrow is more likely a subdued day. There's little chance of a lot of upside tomorrow. In fact, it's completely logical that we would see some kind of a retracement tomorrow, not necessarily 50% or 618, but we would see some kind of retracement a little bit, maybe a third, something like that is not out of the question. In fact, it's probabilistic, if that's a word. I think it is. Okay, so back to the spider here. What I'm going to do is I'm going to take off this some of these trend lines that we had from before because they're not really valid anymore. Okay, as time passes and the market develops a different pattern, those trend lines don't really matter anymore. But what I can tell you is, and where was it? Was it on the spider that I did this yesterday? No, it was. Was it? Where was it? Remember yesterday when I drew in a trend line? I can't remember where that was. I drew in a trend line. Maybe it was in an hourly chart of something holding. I can't remember where it was. Anyway, it doesn't matter. Sorry about that. I was I can go back obviously and watch the video, and so can you. You probably all remember where it was. I just don't. My memory is a little bit mush today after today's trading. So okay. So the spider. So here's what we've got. So where's the upside? In fact, I'm going to give you numbers in the E-mini. I'm sorry to keep jumping around. I hate that, but this is where I have the real numbers, so you'll have to forgive me. It's just easier for me to be accurate here, and then we'll translate it over time to the SPY. So what we have here is as long as the market remains under 2107, basically today's high, I think that was today's high, it's 2108. So we'll say as long as it remains under 2107, 2108, then there's a likely chance that we're going to see the retracement. And, if you look at this 60-minute chart right here, the logical retracement for me, number one, would be to the 200 period moving average, which is right now about 2099. Okay, so we'll call that 2100 for roundness. And then if you continued farther down, you would end up making the 50% retracement. And I'm just eyeballing it. I can tell you it's a 50% retracement, and you can see it too. Back down to this 2091 area. And I'm drawing those numbers from other sources in terms of other analysis I've done throughout the day. But it all lines up, and like I showed you last night, when two or three things line up together, it's a pretty good indicator. So let's just see if that is a 50% retracement. And what do we have? And 50% would be at 2088, a little bit over an overshoot of my 2091. So we'll see. Nothing's in stone, but in this general vicinity would be the second target for a retracement if this didn't hold. And I'm going to say 2099. If that doesn't hold, then this is where you're looking for also. Now, could this be a buy area for A, an intraday trade, B, a longer term hold for another up move in the spider? Yeah, I think it could. And all you would have to do is know that if you started getting weak under 2091 with any significant volume, any significant hourly closes, then I would move out unless you want to hold to see if the 2085 holds, because the 2085 is still going to be extremely important, okay? There's no doubt about it. So 2085 is important, 2105 is important, and you can see how we beat around 2105 today a little bit. You see that 2105 up and down, over and across 2105, and that makes sense because that's been on our radar screen for quite some time. And if you go to the hourly, you can see that the 2105 has been in there for a while. All right, I don't really have much else to say. It was a nice update. We expected it. We got the doji yesterday, and I expect more upside. Whether it's over the next couple of days, we see a pullback or not, that's normal behavior. What I'm suggesting is that this should be the beginning of another leg up, or the final leg up before what I will call a bigger correction in the market than we've seen this year yet. Okay, so we'll leave it at that, and let's move on to other markets. So we have gold. Gold, let's go to the daily chart because I want to just point out something we've been talking about, but there wasn't enough of the confidence of the trade. Okay, remember I said, and I put this in, which was 1185. We put this in several days ago, and what happened was we did test the 1185. We overshot it, which was normal. That's okay. And then we closed at, well, we're right at 1185.20 here. So, you know, what was the high? 1186.60. So we closed below that number here, which was the high of this day here, this big down day. And what that tells me is it's struggling to close above there, meaning it's struggling to go higher, get through there. So we've got to see a close above there in order to get into the 20 period and the 50 period moving average, which is about 1196, 1197. And that coincides with this other number, which I can't see exactly. Let's go this way. 1197.50, I believe it is. Yeah. So that my 1197.50 would be the next target, but we've got to close, or at least hourly and then daily, above this level here. And that's where we stand in gold. Now, I didn't have a definitive reason to be long gold, so we just couldn't do it. And I still don't. We're just not, we're not putting in a pattern that I can say, this is something I want to buy, right? So, and when I talk about, patterns, I want to see something like, well, we'll talk about some stocks at the end, and I'll show you the patterns and why we bought certain stocks. Okay, so that's gold. Not much going on. We've just got to see the market tell us what to do. But the longer-term picture, I will tell you that I think there's another $50 on the upside, up to this double top here, maybe slightly more than 50, up to this double top here. And I don't know exactly when that's going to come, but I do know it's going to come really into the summer. I don't know if we're going to see lower prices first, and that's why I'm hesitant. You see this 1155 down here? I'm a little bit shy of that. I'm a little bit shy of this double bottom right now, and I just have to see the market show us more definitive, I guess you could say, behavior in order to say that we've made the beginning of the move up to this double top. But I do think that's coming within the next, let's call it 6 to 8 weeks. And that's kind of my story. So if you're someone that's a longer term holder and don't mind some pullbacks along the way, then by all means, I'm suggesting that gold's going to be up at about 1130, 1140, maybe even sometime in the next couple of months. So I think that's a good bet, if you will. Let's go to oil. Now, oil had a nice up day. And again, we were in the middle of this range, so I said, we've got to see us go to the top end of the range or the bottom. The bottom didn't get there, and I would have taken the long, but didn't. And the top end, maybe we'll get there, but here's what we've got to do. We've got to get, what's this number here? No, it's higher. I'm going to put a number in here for you, and let's see. Okay. So we've got to get above 61.75 on a closing basis in order to get to the top end of this channel. And that's where we stand right now. So until we can do that, we're going to see lower prices. That meaning until we can recapture 61.75 hourly and then daily closes, then we can go to the top end of the channel. If we can't, then we're probably going to go back down to the bottom end of the channel. And that's my story there. That's pretty definitive, by the way, so you can take that one to the bank. The bond market. Okay, here we are to the bottom, or the green 115.43 that's been in there, it seems like forever. So this is a place where you take a trade. Now there's two ways to do it, okay? You can take the trade based on the number. It's a mathematical number, and that's okay. I'm not saying it's high risk. I'm saying it's higher risk than the alternative. And the alternative way to take the trade, well, there's three ways, so I'll give you all three. So the second way to take the trade is to look for the bottoming signal, one that looks similar to this. Okay, you're looking for a doji, you're looking for a reversal candle, you're looking for some kind of, maybe even a flush and a reversal. That you're looking for a signal the market is making a shorter or even an intermediate term bottom. Okay, longer term bottom you can't say until you see the velocity or the type of volume that carries the market higher off that bottom. So you can't really say it's longer term until later. But shorter to intermediate term you can. So that's the second way. You would wait for that bottoming signal and you wouldn't catch the low. This is the first way, is trying to catch the low. The second way is waiting for the signal. The third way is in the middle, and the third way would be tomorrow. You would enter the market as long as it opened above where we closed today, and you would put a stop on a daily close below 115.26, and that would be your third method of taking this trade. Okay, so there's a little Trade School 101, and most of you probably know that, and those that didn't, write that down, because those are, they're not going to change depending on the market. They're always going to be the same, those type of trade setups. And I like those type of trade setups because they're lower risk, higher reward. So even if I did the trade where I took the one tomorrow and I put a low on a close below today's low, it's a very tight stop. Therefore, I'm not risking all that much for a nice potential upside. You can get $3 or $4 in the TLT upside if this market's going to go higher very, very rapidly. And then I would expect, if it is a shorter intermediate term low, I would expect the market to trade up to 120 and higher and probably start to work towards this double top here at some point. But we don't have to talk about that now. That's for later. Okay, so we talked about gold. We talked about crude oil. We talked about the bond market. How about the dollar? Where's my dollar? Where's my dollar? Well, I'll go to my other chart here and bring it up this way. Okay, that's not the dollar. Here's the continuous contract. Okay. So the dollar, in my estimation, is going to carve out a low here, just like the bond market, unless, okay, and this is another pretty simple trade here. I don't think this is a longer term bottom on the dollar, but unless, so I still think, I'm not convinced this is a low, but for now, unless 94.66, but that's not the number. The number is, it's close, and I'll explain that in a second. 94.50. Okay, so if you can close tomorrow, again like today, above 94.50, then I think you have something there. And the reason why I took a look at the low from here and then I put in a different number is because it's the scenario where, like I said before, where I do some calculations and the calculations came out with 94.50. But then I take this low here, and the low today, had it been 94.50, I would have said that the higher probability, I would have said my probabilities have increased that the market's actually going to bounce tomorrow. but that's not the case. So I'm saying it's a higher probability. It's way more than 50% that this is going to carve out a shorter term bottom in the dollar. But the caveat is that you've got to stay above 94.50 on a closing basis, and that always pertains to hourly and then daily. Okay, and the reason I say hourly and daily is because it's again one of those risk measures. Sometimes I don't want to wait around to see if the rest of the day goes okay and closes above my number. If the market's weak and it's trending down and the first hour closes below my number and the second hour closes below my number, sometimes I don't want to be around. So when I say that to you, the folks that are interested in managing their risk much more tightly than those that are longer term holders and are willing to wait for the daily close, that's where really it pertains to. I tend to be a shoot and ask questions later in some respects, not with the stocks as much with these markets that tend to move around significantly throughout the day. Sometimes I don't want to wait around to find out. But it all depends on the trade setup. And here, I don't have a trade setup as much as I have a mathematical calculation. And when I have a mathematical calculation, that's where I'm tighter with the risk management. And hopefully that makes some sense to you. Okay, so that's my story in the dollar. You have the numbers there. Let's talk about a couple of stocks. Let's see. Let me go to my other chart. Just bear with me a second. I've got some stuff on another screen here. All right. So let's just go down the list. We bought Southern Copper today, and I'll tell you the reason why. Okay. It's more than just Southern Copper. Okay. Here's a daily chart in Southern Copper. And what you can see here is, let me show you a fib retrace, what this looks like. And you can see here that we're basically came short of the 382 retrace, but with a doji candle like we saw in the spider. Okay, but this was several days ago, and we've held above that candle. Okay, that was factor number one. Okay, that was reason number one. Reason number two was something pertaining to, see, Southern Copper is obviously in the copper market. And pertaining to the copper market, and I'm looking for my copper, where is it? Pardon me for a second while I find it. Okay, it was on my other screen. And part of me is suggesting that I have a cycle turning, cycle turning up, a cycle low that should be hitting right now in copper. And you see this it's not a doji candle, but it's kind of a doji candle almost. And this is on volume going up, okay? And volume coming down, but volume going up. So it's not like a weak market. There's accumulation happening here, okay? So I'm suggesting that with a cycle low happening right in this week in copper. Okay, so it's a longer term cycle, so it's not like a cycle hitting Tuesday or Wednesday. It's a cycle hitting around now. Okay, so around, I look for signs. Coming into this double bottom, we bounced off the double bottom. There was a lot of chart support here. There was a big breakout here. So I have a lot of evidence that this is developing a low. It's not evidence of a low. It's developing evidence of a low. Okay. So on a weekly chart, again, you came short of the 382, but we're putting in an up week. Now, if in fact this week closes above this week, which is 275, 2749, 275, okay, then we're in business and we're in for another leg higher. And what would that look like? And you know what I'm going to say? I'm going to say A, B, C, okay? So we'll see if that develops that way, and that's the reason I bought Southern Copper. So here's the method that I used. I looked at copper bottoming, and I said, do I want to play copper as a trade, or do I want to look for a copper stock? Why? Because if I think the market has another up leg, and copper's bottoming, where am I going to get the biggest bang for my buck? being in a copper stock. Double whammy, just like GDX with gold. If gold is rallying and the market is rallying and the gold stocks are rallying, GDX is getting some extra juice, okay? If copper is rallying and the market is rallying, then I'm going to assume, and I know the assume word, but I'm going to anticipate that copper stocks are going to get a bigger boost than just copper itself. So I looked for a good chart setup in copper stocks, and I thought Southern Copper fit the bill. And that was the theory that I used, and that's how I selected that trade. Let's look at another one. We talked about Delta yesterday. Delta is going to cook a little bit, and I think there's a lot more upside in Delta. Let's look at Whole Foods. Okay. Whole Foods, this is a weekly chart, so that looks pretty ugly. But the daily chart, what happened yesterday was you can make a case that we put in a reversal day yesterday, and then we had to follow through today. And by the way, it's not a case. That's exactly what happened. Okay, so right now, the Whole Foods stock chart looks pretty good. Now, it's hard to tell down here. This doesn't look like much to the naked eye, so I'll explain it. Okay, we made a low yesterday. We made a reversal. While we didn't finish above the prior day's high, this, in my mind, in my book, was a reversal day because we made the low and finished near the highs. And that's what I always tell you. I'm looking for that. So I'm looking for that. So then today we had the follow-through day. That was the important day. So if you look here at the hourly chart, okay, you can see this doji here on huge volume compared to the rest of the candles. What does that look like? I'll show you what it looks like. It looks just like this. Not that. It looks just like this. Not that. Third time's a charm. It looks just like this, right? And what did we get? Okay, so they all act differently, but this is what you're looking for when you're looking for the sign. And we got it, all right? So I think there's a lot more upside. So let's talk about where that might be. Well, if you're going to get the upside, you're going to recapture the, well, I don't need this anymore. Okay, that was for a different reason. That was part of the gap trading stuff. Okay, so if you're going to get the upside in Whole Foods, then you're going to make a run at the 20, and you're probably going to stall there for a while, a few days. And then if you pop through the 20, you got to get above this high, but you're going to have a lot of difficult time getting through. You consolidated here for a couple of weeks, right? Maybe almost 3 weeks. Therefore, if you can get above this, which first you get to this gap window here, that's going to be at, we'll call it 43.85. What was the exact number? 43.85. And if you can get above 43.85, you make a run for the 200. And if you're going to do that, you're going to get to gap fill, which is up in this neighborhood right here. Okay, so that's a long way off. That's not going to happen this week. But if we can continue to get a rally in the market and these stocks that are way oversold start to catch a bid, you start to get the short covering, you start to get the upgrades, you start to get the panic buying, we're missing the rally, and next scene shows you get your 3, 4, 5 points, and there's your rally you're looking for. Okay? So that's Whole Foods. Let's talk about one more. Have I talked about CME? I don't think so. Let's talk about CME. If I have, I apologize. But CME, where did we buy CME? I've got to go to my other screen. No, it was around 94. Okay, 93, 99. So this is acting great. Basically, what you've got here is you've now got something to trade against, okay? We're already in the trade, but now what we do is we put a break-even stop, and we're going to look to either take some profit or trail the stop up. So as far as my portfolio is concerned, Okay, this CME, unless it gaps down tomorrow, okay, below my stop, this will never be a losing trade. Okay, so right now I've got to stop at the money. I'm at the not at the money. Yeah, at the break-even point where I purchased. So my stop is 94. It's actually, I always cover my trading costs. So it's a little higher. And then tomorrow, what I do is I begin to trail the stop because I don't want to get out too early. Because based on today's move, there's almost no doubt in my mind we're going to 100, even if we pull back a little bit. So I don't want to get taken out before the move up to 100. Up to 100 is where I'll most likely take half off and move the stop in the money and see how far it can go. So there's your CME trade. If you want to look at a longer term chart, you can see CME is just in an uptrend here, and there's just nothing wrong with this chart. If you do this, okay, and this is just kind of rough, well, that doesn't work. Yeah, I was eyeballing that. That doesn't really work. I don't like that trend line. This one works better, I guess. No, that doesn't do it for me either. See, sometimes I do this stuff on the fly, and sometimes it works and spot on, and it looks like I did it earlier today, and sometimes it doesn't work, and I'm just honest about it. It doesn't work. But I do that all day long. I like to see where the trend lines work and where they don't. Now, on the weekly basis, this is going to be very difficult to close above. Why? Because this was a big down week, and it was down on heavy volume. And my theory is that once you get to 100, you're probably going to stall out. So I'm going to have an order in for 100 for half the shares. They're going to go away. It's probably we'll probably pierce through 100. So, whether it's by a quarter, 50 cents, $1, who knows? Maybe we get to this double top here, which is 161. And then what'll happen is you'll most likely pull back. And here's that symmetry again, right? You have, and this is a bullish pattern, right? You have, and this is what I was talking about. This was a pattern that you can buy because it's consolidating in a bullish manner. Remember before I said that gold or oil didn't have a pattern to trade off of. This did. So here's your up move. Here's your sideways move for a few weeks. And then here's your next up move. And both up moves are pretty close to the same. Okay, so that's that symmetry. It doesn't always work, but it works a lot of the time. So that's my story in CME, and I'm looking for higher prices in CME also. That's about it. I'm going to leave it there tonight. I know it's a long video, and I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.